Welcome back, everyone. Today we're diving deep into Applied Digital APLD and exploring exactly what's happening with this intriguing stock right now. If you're looking to understand the recent market movements, technical signals, and the long-term fundamental story behind APLD, you're in the right place. Before we get started, make sure you hit that like button and subscribe to the channel so you never miss out on the latest market insights and stock breakdowns. Now, let's get right into it. The content provided in this video is for educational and informational purposes only and should not be considered financial, investment, or trading advice. Applied Digital, APLD, or any other stock mentioned is used purely as an example, and past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial advisor before making any investment or trading decisions. Trading stocks, cryptocurrencies, or other financial instruments involves significant risk, including the potential loss of your capital. By watching this video, you acknowledge that you are solely responsible for your investment decisions. Over the past few trading sessions, APLD has faced some downward pressure, trading in a relatively tight range between $26.91 and $27.50. This minor decline over the last 24 hours reflects a broader cautious sentiment in the technology sector, mirrored by the XLK ETF, which has also been moving lower. Investors have been digesting macroeconomic headwinds, including elevated oil prices and ongoing geopolitical tensions, which are creating a risk-off environment for tech and growth-oriented stocks. Despite this short-term weakness, institutional interest in APLD remains robust. The stock continues to maintain a 52-week high of $42.27, demonstrating its potential for upside, while the 52-week low of $3.31 highlights the tremendous range in its historical volatility. This wide band indicates that while the stock has experienced dramatic swings, it also presents opportunities for investors who can tolerate the inherent risk. Technical signals for APLD are currently mixed, suggesting that the stock may be entering a period of consolidation or potentially forming a bottoming structure. Traders and analysts are closely watching how it behaves relative to key moving averages. At present, APLD is trading below both its short-term and long-term moving averages, a condition that often triggers a sell signal for trend-following traders. Resistance has been observed at $31.53, and a decisive move above this level could be interpreted as a bullish reversal, potentially opening the door for further upward momentum. The Relative Strength Index, or RSI, has been trending downward and is now approaching oversold territory. Historically, when APLD's RSI reaches such low levels, it has frequently preceded a corrective bounce, offering a tactical entry point for nimble traders. On the support side, a key level is established at $25. If the stock holds above this level, it would confirm a bottoming pattern, providing reassurance to long-term investors that the downside risk may be limited. Additional resistance levels are noted at $34.86 and $38.70, which could serve as profit-taking points or barriers that need to be overcome for sustained upward momentum. Beyond the RSI, the stochastic oscillator is showing signs of recovery from oversold zones. Many traders interpret this as a tactical buy signal, signaling that short-term momentum may be shifting in favor of bullish traders. This technical backdrop is complemented by a fascinating fundamental story. Applied Digital is transitioning from its roots as a crypto hosting provider to becoming a premier AI infrastructure company, positioning itself at the forefront of a booming industry. This transition has been supported by impressive revenue growth. In fiscal Q2 2026, the company reported revenue of $126.6 million, marking a staggering 250% year-over-year increase. This growth has been largely driven by the build-out of its AI factory facilities, which are designed to cater to the growing demand for AI compute and data center capacity. However, to fund its aggressive expansion, the company undertook a significant debt offering. In early March 2026, APLD priced $2.15 billion in senior secured notes. This large infusion of capital is specifically earmarked for financing the Polaris Forge 2 campus in North Dakota, an expansion that underscores the company's commitment to scaling its AI infrastructure. Adding further credibility to its growth trajectory, Applied Digital has secured a 15-year lease with a major hyperscaler, Oracle, projected to generate $5 billion in revenue over the term of the agreement. The company's pipeline continues to expand, with a goal of reaching 5 gigawatts of capacity by the early 2030s, highlighting the long-term strategic vision and commitment to becoming a dominant player in AI data center infrastructure. While revenue growth is impressive, it's important to note that the company is still operating at a net loss, approximately $31.2 million in the most recent quarter, largely due to heavy capital expenditure. This is a common pattern for high-growth infrastructure companies where short-term profitability is sacrificed for long-term scale and market positioning. Investor sentiment, particularly on platforms like FinTwit, Financial Twitter, has been focused on 3 key themes regarding APLD. First, there is a debate over the $2.5 billion debt offering. Bulls argue that this capital is essential to fuel a $16 billion backlog, representing a tremendous opportunity for revenue generation, while bears express concern over the debt load and interest obligations. Second, recent 13F filings have highlighted new institutional positions in APLD, which has reinforced a strong buy consensus among approximately 73% of analysts. Finally, traders are closely monitoring the correlation between APLD and its partner, CoreWeave, especially in light of recent volatility in the broader AI data center ecosystem. For investors who believe in the long-term thesis of AI infrastructure, the recent pullback to the $25–27 range represents a high-risk, high-reward entry point ahead of the next earnings report, which is estimated to be released on April 13th, 2026. Traders are advised to watch for a confirmed break above the 20-day simple moving average at $29 as a potential signal to go long, with a near-term target of $34. As always, risk management is critical, and a strict stop loss below $24.40 is recommended to protect against downside volatility. In addition to the technical and fundamental considerations, the broader market environment plays a significant role in APLD's price action. Elevated oil prices, geopolitical tensions, and a cautious technology sector have all contributed to short-term downward pressure, but these macro headwinds are balanced by robust institutional interest and the company's compelling long-term growth strategy. The juxtaposition of strong revenue growth, strategic partnerships, and continued infrastructure expansion positions APLD uniquely among AI-focused data center companies. Furthermore, investors need to consider the interplay between sentiment, technical patterns, and fundamental developments. While the stock currently trades below key moving averages and has experienced a minor decline, technical indicators such as the RSI and stochastic oscillator suggest potential tactical opportunities for those willing to take calculated risks. The $25 to $27 support range is particularly critical as it may represent the floor of a bottoming structure. Should this level hold, it could provide a launching pad for renewed bullish momentum, particularly if broader technology sector sentiment improves. On the other hand, breaking below this support could trigger further downside, underscoring the importance of adhering to disciplined stop-loss strategies. Applied Digital's positioning as a premier AI infrastructure provider is further reinforced by its long-term strategy of capacity expansion and strategic leasing agreements. The 15-year Oracle lease, projected to generate $5 billion, is a significant validation of the company's approach and underscores the demand for large-scale AI computing facilities. Coupled with a 5-gigawatt capacity goal by the early 2030s, APLD is clearly aiming to capture a substantial portion of the rapidly growing AI infrastructure market. Additionally, the company's $2.15 billion senior secured notes, while contributing to short-term debt concerns, provide the necessary capital to accelerate expansion and fund large-scale projects like Polaris Forge 2. The market's focus on this debt offering has sparked spirited debate among analysts and investors. Bulls emphasize the growth potential unlocked by the capital infusion, while bears caution about leverage risks and interest obligations. This dynamic underscores the polarized sentiment that often accompanies high-growth, capital-intensive companies. Social sentiment, particularly within online trading communities, is also shaping perceptions of APLD. Viral discussions and analysis of 13F filings have highlighted institutional buying, reinforcing confidence in the stock and helping to cement a strong buy consensus among analysts. These insights, combined with technical signals and fundamental developments, create a nuanced picture for investors looking to navigate APLD's price action. Looking ahead, the next earnings report in April 2026 will be a pivotal catalyst. Investors should watch closely for revenue growth, progress on the AI factory buildouts, and any commentary on capacity expansion, as these factors will likely influence short-term price movements. Technical traders will be monitoring the 20-day SMA at $29 Cs, as a confirmed break above this level could signal renewed bullish momentum, potentially driving the stock toward $34 and beyond. Conversely, holding strict stop-loss levels around $24.40 is essential to protect against unexpected downside, particularly given the high volatility inherent in AI infrastructure stocks. In conclusion, Applied Digital presents a compelling, albeit complex, investment opportunity. Its transition from crypto hosting to AI infrastructure, impressive revenue growth, strategic partnerships, and ambitious expansion plans position it uniquely in the market. While the stock has recently faced downward pressure and trades below key moving averages, technical indicators, strong institutional interest, and upcoming earnings catalysts suggest that opportunities exist for those with a high risk tolerance. Careful attention to support levels, resistance breakouts, and disciplined risk management is crucial for navigating this dynamic landscape. This is a stock where long-term vision and short-term tactical execution intersect, making it an intriguing case study for investors seeking exposure to AI infrastructure growth. Thank you for watching this in-depth breakdown of APLD. If you found this analysis helpful, insightful, or informative, don't forget to hit that like button and subscribe to the channel for more detailed market updates, stock analysis, and investing insights. Your support helps us continue delivering high-quality content and keeps you updated on the latest developments in the stock market. Stay tuned for more updates, and happy investing.